Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 8th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement in your portfolios, but please do that in your own way. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. With that economic data, there's not a whole lot to see here other than crude oil inventories, and that came in as a drawdown of 1.4 million barrels, expected to be a drawdown of 2.8 million barrels. So less of a drawdown than expected would mean more supply, therefore sending crude oil down. Now, we've seen these numbers come out, and crude oil completely acts in the opposite intuitive direction, should say. And that being said, today, with a higher build, we are seeing downward pressure on crude oil. That being down at almost $2 right now, out of that $70 area that I've talked about. We get up into that $70 area, and I really think that it's going to start crimping the spending of consumers, which slows velocity of money and therefore puts a crimp on the expansion in the economy. So coming off here, that's good. That frees up the retailer to spend that money the way that they want to, rather than just on one particular aspect of the economy, which being gas. That's not what we want to necessarily see. So crude oil coming off, in my eyes, is a good thing, especially at this time where we're at a teeter-totter kind of thing, where we're not really we are expanding because the numbers are coming out above 50, like the PMI, CPI, and stuff like that. Anything above 50 is expansion, but we're really not knocking it out of the park, which means we're kind of trudging along nicely, and any kind of spike in oil or something like that could cause that to stall a little bit. All right, gold. Not a whole lot to see here, is continuing to trend sideways right here above that $1,200 mark. That is the real line in the sand for the bulls and the bears to fight over. I think the bulls are going to defend that till the cows come home. Anyway, play on words. Not very good, I guess. That being said, we've got Bitcoin coming off a little bit. There's a lot of stuff I've seen on Twitter about the ICOs and the SEC coming in and stuff like that. I don't know if that's necessarily affecting this, other than that there's so many coins out there that it's really, watering down the market and making it difficult for the consumer to decide which coin is going to be the one that is accepted. And we haven't really found that out yet. All right, bonds are moving higher a little bit today. Nothing really to see. I would say they're unchanged for all intents and purposes. VIX continuing to slide a little bit today. We did get a late day spike in the VIX to get it to stay above a 10 for the most part. I thought it was going to break below that. We did get a bit of a bounce late in the day. We are still in double digits, but I don't know how long that's going to last. We've got the Dow Jones Industrial Average off 35 points or so. One thing to note here is this 38 Fibonacci extension was defended by the bears. We came up, touched it. This value area high is also going to act as a resistance area. Today, we haven't really got confirmation. We could be getting two dojis, the counter-opposing dojis that we talked about, that it ends up being a continuing pattern. It looked like it was getting a confirmation of a top earlier today, but with this late morning rally, we're seeing this not look so confirmed, if you will. So we could see this continue to go higher with today's action. And, being drug up, a rising tide lifts all ships. With the rest of the equities, we've got the NASDAQ up slightly, but the big key here is it settled above its 61 fib extension. That is a good place for one, the shorts to dump out of. Two, get above and settle above that. The expectation is a continuation to the upside. E-mini S&Ps are off a little bit. Total mixed bag here in the equities, as we saw NASDAQ up, Dow and E-mini S&Ps down. Everything's a little bit wanky today, where not everything's following what we would expect the normal rules or the normal procedure here. But the E-mini S&Ps we could call unchanged as well. This is the 30-minute chart of the E-mini S&P, is pretty consolidated overnight, but longs got flushed out from all of this heading into the early morning. No data to go on. We're getting a kind of a late morning rally here. There's just not a whole lot of volume and or data to trade off of. We do have a Fed governor speaking later on this afternoon, but I don't think that that's going to really drive markets. All right, let's talk about the trades that I've done. I tweeted this out yesterday that I had put on a strangle in Disney, which is exactly what I did here. And one of the things that I talk about in those earnings webinars is cover these trades, the earnings trades, right off the bat. You never know which way they're going to go, unless it's a loser. I talk about that too in those commentaries. But try and cover these right away. With this strangle, I went into the August that expires on Friday, and I did the 111, 124 strangle in there. Right around all my rules for setting up earnings trades on a strangle. Worked out nicely. And I collected $1.17 for that. I bought it back this morning for 12 cents. I actually saw it go a little bit lower than that. You could probably get it into the single digits and 8-9 cents somewhere. But I covered it right off the bat. The market was starting to move a little bit lower, so I decided to pull the ripcord on that right away. My puts were starting to gain in value, so I decided to cover that immediately and according to my rules. So that was a nice little winner there. One thing I do want to talk about is Disney. You can see this was a topping pattern. I did put in a strangle around that. I was a little bit concerned about that, but wasn't too concerned about the upside. The downside was my 111s. You can see that was way down here. So that would have been a major miss on Disney's part. And I didn't think that they were going to miss very badly anyway. That being said, that's why you cover right off the open. All right, Tesla. News been out about Tesla. It's not a secret that I am long puts in Tesla. They're 2-year puts. Right now, they are right back to about break even. I'm not worried about it because I collected enough credits to pay for those puts. They're really on for free. But right now, they're right around the value where I bought them for. So that being said, I'm still going to ride those out. They're on for free. But there was a big news story that Saudi Arabia back in April was buying Tesla like there was no tomorrow, I guess. And now Tesla's considering other options as well. That drove the market quite a bit higher, as we can see. If we switch this over to a daily chart, it has blown the doors off to the upside the last couple of days, as you can see here. Just a massive rally to very close to historical highs here. I think it's overdone. I'm still a bear in Tesla. I don't think that they've done anything. They could sell everything but a Model 3. So go ahead and try and sell as many couches and flamethrowers that you can to try and make up for some of your margin loss on all these cars. I think that it's going to shake out. Funny thing is, Saudi Arabia buying an electric car company. I wonder if they want to do that just to flush it down the toilet and not allow it to continue. That has happened many times in the auto industry. Say, for instance, the diesel engine was built to run on not fossil fuel, but biodiesel. It was specifically designed and engineered, and the patent says that it's for biodiesel. And the car industry's bought that and switched it over to diesel and made all kinds of different regulations since then with these crazy little filters that'll get clogged up with biodiesel and stuff like that. But that is exactly the type of situation Tesla is facing with a company or with a ownership from an organization that is founded on oil. It is very counterintuitive to go to this. They might want to shut this down in order to continue that whole oil longevity, if you will. Because if there's no need for oil, Saudi Arabia has no hand. All right, that's about it for today. Check out tomorrow's webinar. It is going to be on laddered puts and how to build those out, especially if you want to add any type of stock to your overall portfolio. This is a great way to set it up. It gives you some income in that time while you're waiting, rather than just putting an order in there with your broker and waiting for it to get hit. I'll show you how to be a little bit more proactive with that. And then when you finally get your stock, you have lowered that basis dramatically from where you actually purchased it. And I'll put all those levers and pulleys back together for you so that you can see that in the webinar tomorrow. All right, so go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.